Hello everyone. So today I will be able to teach you or guide you through how to do the top-down analysis, or maybe how to use the smart money concept in trading either of these indices. So I'll take, for example, volatility index 100 and see where the market will go. So first thing first, while trading any currency pair or any index, what you have to do while using the smart money concept, first you have to identify where is the trend going to, or what has been the trend in the past hours that have been there. So for example, in our case, as we can see, the trend has been bearish all along for a very long time. That is when we're using the 1 day time frame. But let's kind of use even in 1 day time frame, it is evident that it is a downtrend because the market has been forming higher, not higher really, but lower lows. Just a minute, let me go, let me help there. So the market has been making lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and like that. It is moving in kind of like a wave. So in this is how you identify a bearish market structure that is making lower lows and lower highs. So in this our case, what will be our next trade direction? For this case, we are going to go, we are expecting a bearish signal. For that case, we are going to look for our entry point. So let's go to the forward chart. Let me minimize it. As you can see, when you're talking about the market here, let's start the analysis from here. For example, here, as you can see here, the market was moving downwards. It broke the structure. There's a break of structure here. Here is where the break of structure occurred. And then while moving downwards, besides breaking structure there, the market also broke structure. Yeah, the market also, after breaking the structure here at this point, then there is the market came back. The market went down, after which it came back to retest the level where the break of structure occurred to refill in that imbalance. So after that, the market, where we were supposed to take our sell signal was at this point here. We were supposed to take our sell signal there. Then after that, we can also see that it is evident that the market also broke this level here. When the market broke this level, it created another low here. Now this is the recent low. So this recent low has to be broken first before we look for our next signal. So our first signal was to be at this level, which was broken, and then our second low entry point is going to be at this level. So for example, let's move. It will our second level was at this point where it was broken, right? Yeah. So let's analyze this. As we can see here, there's a break of structure still, but this break of structure did not happen. This thing is kind of so disturbing. So there's a break of structure here. As you can see, the break of structure happened through this. See, now when the price came downwards, after it came down, broke that level, went back to retest that zone, then it did not break that new support. So it went back, creating an inducement that to confuse the buyers that the market has reversed, after which it came back with force to break down that level. So see here, our recent supply zone or resistance zone is at this level here, this level. So we expect to get a signal from that zone. In that way, now once we realize that our next entry point will be at that level, once we realize that our next entry point is going to be at that level, then just a minute. Once we realize that our next entry point is going to be at that level here, because this is the recent resistance level, now we go to the lower time frame to look for entry points. Now let's go. I usually use the 15 minutes for entry. So it is here where we are going to look for the change of structure taking place. So from here we can see that the market truly was going down, but wait a minute, let's mark our zone so that it be easy for us to realize where we're going to enter. We're going to enter at this imbalance here, FVG level. So FVG just means fair value gap here, that large candle there. So at that level we are going to enter once the price enters at that level, that zone. So we go to the smaller time frame, say 15. See, the market is ranging within that zone, as you can see, and now we are going to enter once the change of structure happens, or once we see any reversal pattern. As for this case, we can see that here the market has formed what we call the double top. As you can see, double top to mean that is a reversal candlestick, not candlestick but chart pattern. Here is our base. So the market has created that double top, as you can see here. This is the double top we're talking about, equal highs at that one. So the market is going to break here. After breaking, the market is not going to go straight or smooth, but it's going to come like this, then come back to retest. Let me make the chart kind of much clear. So the market is going to make this kind of movement, going up. That is the high, first top, second top, now third top. Is going to break that zone you're seeing there. Here is the base. So once that base is broken, the market will come back to retest that level. So we enter at the pullback now, then move down, move down, move down. Better still, if the signal is so sure as it is now, we can just enter, because we know that the market is going to break this zone here. We've already marked the zone. So once it breaks this zone here, let me change the color for that so as to prevent confusion. Yeah. So once the market breaks that zone, then we wait for a pullback at this second level here, then we enter going downwards. But still you can enter there for the second top, though for conservative traders it's better that we enter at the pullback. But for my case, I'll try enter at where the market price is at now. I won't wait for it to come down, though. Don't apply that, but I'm just doing this for illustration.
A few moments later.